What's up, guys? Just wanted to go over something real quick on an article that I just read. So the article was talking about Charlie Munger and how Berkshire Hathaway is sitting on $88 billion in cash. Now that is a huge amount of money, and this article was talking about how in 2022 the S&P dropped 19%. Yet at the same time, when stocks seemingly appear on sale, Berkshire is sitting on a boatload of money. It goes over how Buffett and Munger do not believe in timing the market for the sake of, oh, we think prices are done going down and they're about to go up. And looking at it from that perspective, what they look at is what is worth putting our money into and how can we get a solid return. Now, something a little interesting about this scenario is Charlie Munger does say that personally he is always invested. So as an example, I remember listening to an interview he had, and they're asking him about like ways to invest in recession and a market that is cycling downwards. And he talked about, again, his investment situation right now, and something he said is it perfect? No. Is it okay? Yes. And he's talking about how sometimes you have to take the least bad option, and he's just always invested. Now, at the same time, Berkshire is sitting on, again, 88 billion in cash, and this is not invested. They talk about how they, being Buffett and Munger, they talk about how the reason they have so much sitting in cash is because they don't see something that they see is worthwhile putting that money into. So they are waiting for opportunities to arise that are worthwhile investments, and therefore their money sitting on the sideline. Now, another interesting thing that I would like to bring up is the case of how these large companies need to make larger investments to really make an impact. So as an example, again, 88 billion in cash for Berkshire and market cap of, I haven't checked in a little while, somewhere north of 500 billion, I want to say. If they were to invest in a smaller company that maybe got really wrangled in the market and there's a lot of value there, say they invest something like 20 million in a small company. If that company were to 10x and the value of that investment would 10x, that would turn into 200 million. Now, does going from 20 to 200 million make an impact on a 500 billion plus market cap and a company that has 88 billion in cash? No, it really doesn't. So that's another issue of these large investment companies like Berkshire Hathaway. They have to make really big swings in these big companies to be able to produce gains on these large amounts of money to turn into bigger amounts of money to really raise value for shareholders and company owners. So just want to share that little bit of information after reading that article and thought that was pretty relevant. Anyway, let me know what you guys think. Thanks, guys.